Yep. Hi guys. Welcome back to another night of our usual Thursday night, not so late night show with mykayaplus. And today, yeah, Sean is back today. I see you have a nice chat.
Yeah, hello, long time no see. Sorry, I was away from.
No worries. I think you are just in time for an interesting company. I think this is one of the most interesting company that we actually come across during for the last few weeks that we have been venturing into tech stocks. So today's company is me, Technovation. So Sean, just to maybe get the conversation started, do you know anything about this company before we dive deeper in? Sean, is your mic on? I can't seem to hear you.
Oh, sorry. Yeah, I'm muted. Yeah, I read a bit about the company. I think a lot of tech stocks, as in those in Malaysia, are always in Penang. So I think this company is also in Penang, right?
Yep, it is in Penang. So yeah, I think you are right about that. I think this is also one of a company that is if you look at the tech stock in Malaysia, usually they are always at the mid to end stream part of the whole semiconductor value chain. So this company is also servicing the players which is in the mid to end part of the semiconductor chain. So I think let's see how much crowd is there. If the crowd is big enough, then we can proceed. Let's see. Okay, we have 45. I think we can get the ball rolling. So welcome, guys. Very glad to have you all on board today. And today's company is on me, Technovation, Berhad. So of course, as the usual disclaimer, this is just for education purposes, not a buy or sell call. It's mainly a sharing and educational kind of content, and hopefully a beneficial one for this coming 1 hour. So me, equipment, what does it do? If you were to Google the company, or if you were to look at the annual report, they will tell you, oh, I do WLCSP. These are the 5 big capital words. It's a acronym. They basically just say, I do this. And if you are not an engineer or you are not in the semiconductor line, you will probably don't know what that is. And that is also the same problem that I face. And so of course I have to go and dig deeper and try to understand and then try to understand the value the company actually provides, and should retail investors like you and me eventually if invest in it if there's value there. So in very, very basic terminology, they do machines. They make machines. And these machines are useful for semiconductor companies, particularly companies who are IDMs and OSATs. Of course, OSATs, we have talked about one of the OSAT companies a few weeks back, Inari.com. So if you are not sure what is OSAT, you can check back that live. It is on our Facebook and also on YouTube. So, but briefly, OSAT basically they just help to package a chip into a transistor, into a component, and then this component will be sent back to their respective owners, and then to be built into your mobile phones, to be built into your TV, your laptop, all this kind of electrical kind of stuffs. So OSAT makes the components, but OSAT companies doesn't make the machine to make the component. Me, Technovation, actually makes the machine, and OSAT company uses the machine to make components for you. So, semiconductor, as we have talked about it, it's a very broad thing. And if you are not from the engineering background, kind of degree or whatsoever, your impression of what a transistor is, or what a semiconductor component is, it's basically stuck in the 1970s. Basically, this is the typical transistors, types of diodes that we used back in our Kemahiran Hidup days. So during our KH days, we also do some very basic kind of electronical stuff, right? We solder LEDs, we solder transistors, we solder all those kind of components into a circuit board, and then we make a circuit board that when we turn off the switch, there is sound, there is a light, there is a combination of everything. So that was the technology back then in 1970s. And if you remember back then, our TV back in the 90s, if you are as old as me, the TVs were very big. They were like a huge box. And to move a big TV back then in 1990 plus, 1999, 1998, you might need 4 to 5 people because the whole TV was so heavy, because there are a lot of circuit boards inside, and there are a lot of these electrical components inside. But you fast forward to today, you have a TV that is so thin. Previously, in 1999, the TV maybe is fatter than you, but today the TV, if all the TVs is so slim that even a few TVs stacked together, you'll still end up as thin as you, because the size of the semiconductors or components inside have shrunk so much with the advancement of technology. We managed to shrink a board that was previously so big into just a small chip that maybe it's just the size of our hand or just smaller than our hand. So that is the advancements of semiconductor along the years. So this is just a brief photo. Of course, you can see quite not so clear, but if you want to see clearly, definitely do check out the rewatch or recap on YouTube. Definitely that will be on full screen, and you can see more clearly on how semiconductor has evolved from 1970s until 2010s and 2020s. But just to give you guys a brief idea. So this is the typical transistors or the size of components back then we use in our KH days. This was 1970s kind of technology. So everything is big and chunky. And then we figured out how to make semiconductor parts that instead of have 3 legs, then why don't we just pull out more connections to it? I mean, everything is into one component, and then from the component you just make more connections into the circuit board. So you have this kind of semiconductor components where you have a lot of wires charging out, and then everything will be connected via the circuit board. But that was not enough. We went deeper, and then we thought, because the wires were taking up space, 3D. So we shorten the wire. We basically make the chips so close to each other that the connection that's needed is just a tiny bump on one side. So your chips now are flat, they are super thin, and that is why you can have very slim phones and very slim TVs and very slim electronical appliances that we have today. So on the left here is actually, you look at it, this is the back of iPhone Pro Max. If you just strip it out, this is just the component inside. It looks very simple. It looks not as complicated as the circuit board that we see back then, but everything has been shrunk into so many that you don't see with your raw eyes. This is the amazement that science and technology has brought to us with the advancements of semiconductor technology. So, Sean, of course, before this started, Sean was actually clueless on how this company actually brought benefit or value to human mankind, how to do this business. But now, Sean, after looking at how semiconductor has changed our life and evolved, what do you think?
I think I need to spend a bit more time on Wikipedia when you showed that chart from 1960, 1970 and yeah, I think there are some documentaries about it. So yeah, I think it'll be interesting how it's evolved. I mean, phones are getting smaller, right? Yeah, from long time until now.
As of now, chips are even smaller than the fraction of your finger. Your finger now is maybe how many cm? Maybe give it 5 cm. So this chip is just sitting on the edge of your finger, and it's so small. And this actually goes into your mobile phone and many other chips. Everything has become so small. That's why you get a slimmer phone. You also get to enjoy bigger screen because with smaller components means that you can make adjustments to other things. You can have bigger screens as well, and bigger processors and more powerful processors as well. So it's just how amazing science and technology has brought. So coming back, what does Me Technovation do? So we already mentioned that as of today, the most advanced chips, they don't use any pins connection. They use what we call a bumper, solder bump. So basically, instead of having wires and then solder them to the circuit board, you have these silver small balls that just gets attached to the pin to the circuit board. So you don't have any wires touching out. You don't have any ugly pins touching out. Everything is connected just like a jigsaw puzzle on a circuit board. So everything is neat and tidy, and everything is super efficient because you do not have extra wires which the electrons needs to travel. So everything is just within the diameter of the ball to get the current transferring information between the semiconductor and the other components inside your smartphones. So of course, what Me Technovation do is that they make machines that helps to produce WLCSP, the 5 capital letters that we just saw just now. So what it stands for is wafer level chip scale packaging. So the machines that Me Technovation makes allows semiconductor players to go into this kind of micrometer or nanometer size to produce chips this small, and to even package it, and to even check on it, do inspection on it, in ensure that the chips have very low or close to 0 defect rate, and then only they ship it to their respective owners. So in a very brief explanation, Me Technovation makes the machine, sells the machine to an OSAT player like Inari. Inari helps Broadcom to package their chips, and then after packaging, testing it, Inari sends back the chips to Broadcom, and Broadcom maybe sends it to one of the phone manufacturers to get inserted into a phone, and there you have your radio frequency kind of chips inside your mobile phone. So Sean, clear now, and more interested to know how Me Technovation do business?
Yeah, please go on. I think there's one question about whether Me is the same as Inari or doing the same thing as Inari. So I think that's clearer now.
Yep. So yeah. So of course we did highlight also why you need to have bumper solder balls. It's the smallest possible package footprint. You don't need long and unnecessarily ugly looking wires. It has superior electronical thermal performance. That means all the signals get transmitted at a faster speed, and of course there's lower resistance, lower inductance, and maybe lower lag. So just now we say that Me Technovation makes machines for OSAT or IDM players to do business. So if you look at the kind of machines that Me Technovation do, if you look through them, they basically they split out their machines into 5 categories lah. So you got the series name Me, AI, Li, Vi, and Si. So just briefly run through all these 5 categories or series of names. They are actually split into assembly and packaging, vision, inspection, and also final test. And it makes sense because when you make a machine that helps OSAT players or IDM players to assembly and do packaging, you also need to have a machine to check whether during the assembly and the packaging process, will there be any inspection? Will there be any defect? So when you sell people a machine, and then of course you sell them an extra machine, okay, this machine can help you check and to prevent any defects before the defects reach your customer, so there will not be any whatsoever complaints or whatsoever. So they sell them the assembly and packaging. They also sell the vision inspection, and then they also sell the fine testing. So it's a complete package for the OSAT players. And usually when an OSAT players want to set up new factory, some new line, they can just straightforward buy the required machine from me, because me actually provides the whole spectrum for an OSAT player to run or expand their line. So I won't go through deeper on the description of each series names, but basically what me has to offer to OSAT players and also the IAM players is quite end-to-end, and it suits their requirement, and it also gives them a one-stop solution to expand their lines further. So this is again another graphical illustration. So if you look back here, basically it just zooms out to let you look at the overall entire value chain of your semiconductor. You have your designer and manufacturing, which is your, okay, you have your designer and manufacturer. Basically, these are your companies like NVIDIA, ADM. They are the ones who design the chips. And then once they design it, they pass it to, they don't make the chips themselves. They pass it to fabricator or foundry companies like TSMC. TSMC is one of the biggest one that we talked about last week. So they pass it to TSMC. TSMC will then fab the semiconductor out, and then but TSMC will not make it into a complete package. So they will just pass these chips to an OSAT company, and then OSAT company will package it, and then only they will send it to the phone manufacturer or the phone companies, the phone making companies like Foxconn. So the one highlighted in gray is actually Mi's Technovation. They say that they are in the line, or they are in the value chain that provide solutions to the OSAT companies, and they provide them machines that can do tests and machines that can do assembly and packaging. So this is actually from their IPO prospectus. If you think the picture is not so clear, you can actually check their prospectus as well. But basically, they will service the OSAT and the IDM players lah. So IDM is actually the big companies that actually do from the designing, the packaging, up till the end. So these are companies like Intel and also Samsung. So far, okay, Sean?
Yes, thank you.
Okay. So we talk about how TSMC services its clients, how it has been growing if you have been following this company. So let us drill into the numbers now. So you can see here, this is provided from the annual report, latest one, 2019. You can see the breakdown here that Northeast Asia in 2019 contributed almost more than half, 156.7 million ringgit out of 191 million. So Northeast Asia, if you Google your Google map, these are companies or these are countries which is in the northeast part of Asia, which includes China, includes Korea, where your Samsung is, includes Taiwan, which is the global hub where a lot of semiconductor companies are located. So you can also guess that they are very focused on selling their machines there, because that is where the opportunities are. And even you look at 2018 also, it is also the main contributor coming from regions like Northeast Asia. Whereas you also have Southeast Asia, maybe companies in Malaysia and Singapore also. We also have a few OSAT players over here. And North Atlantic is the least one. And if you can see, 2018 to 2019, actually the contribution from North Atlantic dropped from 10.5 million to 8 million. So the revenues can drop between each region. And Northeast Asia, I presume countries like Korea and Taiwan are the ones more prospective and has been supporting the revenue growth from 2018 to 2019. And I think one of the most important things that you need to keep an eye on or to really zoom down is, even though the contribution or the revenue has been growing, you can see here they gave their breakdown. In 2018, their main customer is customer B and customer C, both contributing around 43% of the total. That means if B and C don't buy from them, poof, there goes 43% of their revenue already. So actually the thing come true. In 2019, customer and customer C never bought anything from me Technovation. Kosong, zero. But customer A and customer D, suddenly there's a new crop of customers coming out. Customer A and D, both of them bought around 87 million worth of machines, contributing to around 46% of me Technovation's revenue. So from here, it already gives me a hint that the business that me Technovation is not recurring. And if you think about it, it is true. No buyer would actually buy machines every single year. When you buy a machine, of course, you buy a machine that can tahan the capacity for 5 years, 6 or 7 years. Then only you expand a new plant, new line again. So it makes sense that people, OSAT players or IDMs who are running this kind of business, they will only make a one lump sum purchase and that's it. They will not repeat or give another machine order to me Technovation every consecutive year. So for me Technovation to grow, they have to keep hunting for new customers. And we don't know what 2020 holds. Maybe 2020 you will have customer E and F, who are the main customers that are contributing to me Technovation's growth in 2020. So far clear? So we have a brief look through into the corporate structure of me. Of course, Berhad, me Technovation Berhad is the holding company. Underneath of me Technovation Berhad, you have the smaller companies, are the subsidiaries. So you have Sediran Berhad, the company which is in Malaysia, Suzhou in China, Taiwan, USA, and also Private Limited, which is in Singapore. So actually, it drives back to the geographical revenue contribution. If you want to service clients in Taiwan, you got to have a Taiwan subsidiary. If you want to service clients in China, you want to have a sales team that hunts for new sales, new customer. You have to have an office there. And basically, this subsidiary breakdown just let us know that previously the revenue geographical, where is the sales coming from lah. And they also have Korea, which they just incorporated in January 20th, 2020. So you got your answers who me is actually servicing. So after we zoom down into what could be worrying about me, which is their customers will not be recurring, at least for the short-term period, we look at their previous history, but doesn't mean that it is a danger. It is a company that you should totally avoid lah. So far, ever since me Technovation got IPO, they have been growing their revenue. They have been successfully finding new clients to buy new machines from them. They don't need to rely heavily on their old customers who have just bought machine from them. And revenue has been growing. And not only revenue has been growing as well, their profit and profit after tax have been growing. So it's a growing company. Just because the business model is not recurrent, it's not repetitive, doesn't mean you can totally stay away from it. You can take your well-calculated risk, do your assessments, and then you can consider it if it's your cup of tea. And the company also, when they IPO, they took up the IPO funds and then they built a new factory. So previously they only had one factory, and then now they have two factories. Basically, the new factory comes from the contribution and IPO funds of the shares that they gotten. That's why you see their assets have been growing. Shareholder fund also have been growing because it is a very good business as well. Their profit margins are very juicy, very high profit margin, because we will talk about why they can charge so expensive when they sell these kind of machines. And the cash portion also have been growing, particularly of the IPO funds and also the business that they have been growing lah. Net assets per share, even though there is a bit of dilutive actions, I think they give out bonus shares, or they did share split in 2018. I think it's bonus share. So outstanding shares is more, but they still managed to grow their EPS from 2018 which is 6.7 cents to 7.91 cents. And net asset also grew a bit because they had a new plant. So gearing is also very, very little bit. So basically, once they raise the cash, they build new plant, they pay off all their borrowings, and then they are at a net cash position. So this is the kind of company that will not be worried that they don't have enough money to pay their borrowings to the banks or whatsoever. So balance sheet looks good. And if you look at their quarterly report ever since they got IPO, it's around 30+%. 30 plus on gloomy days, cloudy days is 23%, which is still very good. And averagely, the highest is around 37%. So which means that every 100 ringgit of revenue, 37% goes to shareholders. This is your net profit margin, which is very, very impressive for a company listed in Malaysia. So another brief glance through the balance sheet. Of course, the company has been growing. They have been building new plant. Assets will definitely go up. So it's a good sign. Companies growing, assets definitely going to be growing. Liabilities, they crap up a little bit. But the debt, you look at the debt, 6.75 million, then go down to 4.4 million. Then at the end, it's just 7 million. But the cash and cash equivalent, my goodness, 133 million cash. And if you take 133 million divided by total assets, it's around 20% of their assets are cash. And this cash can be used to do a lot of things. They can do R&D, increase their performance, increase their IPs or whatsoever. They can do a lot of things with this cash. And this cash, if used well, will definitely make the company grow higher and higher. Sean, anything you want to add on when you go through up to here?
Yeah, no, listening to what you said, right, I just have maybe 2 points. So the first one is if you look at the revenue from 2015 to year to date, right? So it's quite binary, as you have shown that there's a very concentrated risk of customers, right? So before IPO, it's like 105, 57. So that's more than half the revenue in 1 year. But seems like, they are going on a steady path after IPO. So that's good. But yeah, the point that, maybe that was a bit surprising or stands out more is the total cash. It seems like it's a company that sits on a lot of cash for a long time. So yeah, that could be good or not so good if they don't know what to do with the cash. Right?
Yeah. But I think during tough times like this, management should also be a bit more cautious. Cash would be could be well spent when times are this tough. I mean, it's a very good thing that if you are so far an investor in with me, Technovation, you will definitely have no nightmares or sleepless nights that the company does not have enough money to pay whatsoever. It is a healthy company, and cash is well managed, I would say.
Yeah, I mean, on the flip side, if you look at examples like AirAsia, they don't have any cash to pay, right? Not much left, so that becomes a problem.
So yeah, cash can be used to grow the company, but it can also be used as a defense mechanism during tough times like this. And after going through a healthy balance sheet, promising income statement, of course, we come to the cash flow. So cash flow, you can see quite stable operating cash flow ever since they got IPO. It's around 32.16, 35 million. So plus, each is around 30 plus million kind of operating cash flow. Investing wise, you can see that they have been heavily investing on the company, which is why you get a negative sign there. And financing wise, the yellow bars suddenly so big up here, 167 million is because during the year 2018, they got IPO, so they got money from shareholders So if you are subscribed to me Technovation's IPO, your money is here, 167.81. But soon after that, of course, the company straight away got the cash ready. they just invested lor. So you see investing subsequent year is a negative 70.61 million, and then trailing 12 months is a negative 92. So once they take your money, then they invest, they build new plant and whatsoever. And I think you're going to talk about their new plant and their expansion plan. So this is the numbers capacity of Technovation before the IPO in 2018. So this is from the IPO. In 2015, they only have a capacity to produce 90 machines. And then 2016, it inched up higher a bit, 102. And 2017, 102 also. So they knew they were hitting limit ceiling. This is only how much the company can generate based on their previous capacity. And they have to get money to build new plants, get new machines so that they can grow their business. So, and you can see that the utilization rate, if you average it out, 112%, 62%, 94%, is already at a peak already, at the ceiling. That's why they needed money fast to grow. That's why they went on to IPO their company. And what did they do with the IPO funds? So the home one at Bayan-Lepas was the office and a plant that they completed in 2019. That was after they got IPO, but I think the money was from previously generated. And it has a 200,000 square feet built up. And then the production floor is around 90,000 square feet. And that home one, the original office of Technovation, can produce 540 machines per annum. But they wanted to grow. So they went on IPO. And then if you're an IPO subscriber, they take your money and then they built the one on the right-hand side, Batu Kawan plant, completed just this year, January 2020. 100,000 square feet built up. Totally is factory. I think don't have the office. And then it can make 540 machines per annum. So they double up their capacity 100% from May 2019 to January 2020, just in the span of half a year. So after going through briefly on what Mi does, how they grow their company, what is their prospect, what is their strengths, of course, you also have to look at the downside or the risk of it. It is very reliant on their key clients. You see just now, they honestly tell you that it's a cyclical business. Two clients can make up 50% or close to 50% of their revenue. And if they are not able to find such clients successfully consecutively, then they will definitely have a shortcoming in their upcoming revenue. So this is the kind of risk that could hit the company. Next, foreign currency. Selling machines to China, to US, to Taiwan is always most likely denominated in USD. So a weak ringgit and strong USD means that Technovation, when they sell the machine, convert it back to ringgit, they are able to report higher earnings in ringgit because it's a Malaysian company. But if you are in situations like now, where USD is weakening and ringgit is somehow being strong, definitely the forex gain contributing to Mi's profit will take a hit also . And next will be the IP. So why Mi is so successful in selling their machines is that they have IP patents on how to make the machines, how to do the testing, how to do the visual inspection, whatsoever. Everything is guarded by IP. And the thing about IP is once you register it, you own it, and then once you register it, then people cannot copy it, and then you have a safety period of I think 5 years or 10 years, roughly around this period, to actually earn back the money that you spend on your R&D. Because when you spend money on R&D, you want to come up with a new technology, new method to make, inspect, or whatsoever. Everything needs money. You need to burn money to do R&D, and then once you have a successful method or IP, you register it, and then that's where your earning time . So this is also how drug companies make money. They do a lot of research, like your COVID vaccine, and then the first company who maybe got it right, they will definitely file for patent, and then I don't know about how they're going to make it a patent or whatsoever, but under normal circumstances, they will patent the drug and then sell the drug for 5 years until the patent expires. Then only you have your copycats coming out. So IP is also one of key strengths of me. If they fail to innovate, if they fail to be at the front end of the cutting edge technology, they'll be left behind, and then they are not able to sell their machines, which are giving 30% net profit margin to shareholders. And last but not least, it also links back to the key clients. It is not a contract kind of revenue. So we talked about previously, the past 2 weeks, we talked about 2 companies which are quite good companies like Revenue Berhad. They sell machine, the terminals, they also lease the terminals, but every time people tap on the terminal, pay their credit cards on the terminal, they do processing, that one is a chunk of it goes to their revenue. Companies like Franken, they do servicing and cleaning for big semiconductor companies. Cleaning is a mandatory part in your machine. When your machine gets dirty, you have to clean, or else your machine will generate a lot of defect chips. So that one also is a recurring kind of thing. This kind of company in recurring, every year they will continue to shake hand, do business with the same partners, same clients. But companies like Technovation sell machine to company A, maybe after 5 years only they shake hand and do the second business. So this is the kind of risk that you should be looking at, and you must know that in your mind, and you invest in companies like Technovation. So last but not least, valuation. Let me pull out the valuation numbers first. But in the meantime, we can answer a few questions before we go to the valuation part of Technovation. So comments. Okay, LM Liang, meaning doing same things with Inari. No. What Technovation is, they make the machine, they sell the machine to Inari or companies like Inari. Then Inari take the machine and make chips. So Technovation make the machine, not make the chip. So if you want an easier to understand scenario, take for example, you go to a barber. Your barber cut your hair only, but your barber buys a shaver from someone else. So Technovation is the company that make the shaver, and then your barber is the one that cut your hair. So not the same. Is me or other semiconductor players are suitable for holding long term? Honestly, if you ask me, if you look back at the price chart of companies like Inari, I cannot say because it's just IPO, but I think they share the same inherent threat. Semiconductor companies can be very cyclical one. That means there are times when business is good, then everything is booming. Like now, you can see all your tech companies, even the US companies, they are booming. And it's because of a lot of reasons. 5G or whatsoever, 5G is the main driving force. And 5G, to have 5G, you need chips. And you need chips. All the other industries supporting the chip business will definitely also boom as well. So you are talking about a period where tech companies all bounce and boom together at once. But it is not always every year we have a technological breakthrough. 4G until 5G, during that middle period of time, basically it wasn't a very speculative year or very groundbreaking year for semiconductor companies. There's business but it's just normal, not to say growing every year like mad. So I would say like players for OSAT players or me kind of players, it will be cyclical. I just don't know when the steam will just cool down, and then how and what to do next. But of course, if you have bought the company at very, very low price, you do not fear that the company will go bust. Definitely, you should just hold on because you never know when it will continue to run non-stop, right? Just that the players or the investors who actually think that, oh, this is a company that's interesting, I would like to invest in it. They are the ones who actually have to think deeper. Okay, now is peak period or now is down period, and if I want to buy it now, what is the risk if suddenly the steam cools down? So these are questions that existing people who want to invest but haven't invested in, they need to ask. But if you are a lucky IPO investor back then, definitely just hold on to this company. It has been very, very good for the past few years lah. So I hope I answered your question. So semiconductor is future trend. Yeah, this one I have to agree with you. Semiconductor definitely will be the backbone to all the technological advances that we're going to have. And it doesn't it's just not solely just 5G or whatsoever. Smaller phones, even brighter screens, lower latency, all this kind of thing is because semiconductor plays a huge part of it. Even internet, how it has actually grown, even 5G. Why can 5G be a dream? Because you have your semiconductor chips that is able to support 5G wavelength, and you have your infrastructures who are able to provide this kind of 5G signals. So yes, it is the future, but it will not always run non-stop. Next, Kelly, how can we know who are their key customers? Read news articles. Sometimes you can find very, very deep technical articles in Seeking Alpha. So there are a lot of hardcore investors who are in the so-called semiconductor industry, and then they also have a passion in investing. Then they will also write out their ideas, write out their point of views. From there, you can also take a bit of so-called some of these gems of insight kind of details on who this company is their client. So I think if I remember correctly, OSAT companies which are clients of Me Technovation is companies like Inari and Unisem, UWC. So these are the companies within Malaysia which are contributing to Me Technovation's Southeast Asia regional kind of revenue contribution lah.
Yeah, I think you have one slide on that, JuJuR.
Okay.
That shows.
Okay. So, oh yeah, I think Chun Bing is in. Maybe I should show Chun Bing's face as well.
Hello.
So Chun Bing, you missed the fun part of Me Technovation. Anything you want to top up or ask?
I think most of the people, I mean the audience, they will definitely ask is there any competitor to Me Technovation? I think which is something that when we do the research of this company, we also try to find that. But I think one thing to be sure is I think locally they are one of the I would say one player who do this kind of machine. But then of course internationally there will be some competitor. But then because this thing is quite new as well, so competitor within Malaysia of course is not. But then you can see the market they serve is mainly the North Asia plus Southeast Asia. So the competitor typically come from the Western region, which is not something that will head on with Me Technovation. So if you have question on competitors, probably in this region is very, very few players. But then in the Western region, there are a few.
Yep. So I think it's also a bit on the logistical side lah. So basically, if you are a Malaysia OSAT player, you definitely can buy straight away from Me Technovation. You don't need to act smart, go and buy from a supplier which is in China, which is in Taiwan, where the machines still need to sit on a ship and for a few months travel from China until Malaysia. If you have a solution in Malaysia, you don't need to incur unnecessary tax, unnecessary foreign exchange exposure. Just buy the thing from your neighbor. If you're in Penang and if Me Technovation is your supplier, just buy it from your neighbor and then a phone call away, the machine can be delivered to your factory when it's done. So Lee Kyung Po is asking, at one point the machine purchased from clients will reach a peak, then revenue will start to decline. I think this is also one of the concerns that we pick out when we studied Me. But we also don't want to really penalize Me just because it is currently this selling machine is their main contribution in their revenue. Nevertheless, if you look at how the management responds to questions, of course they will get this kind of. I'm not the first person who realized that Me is selling machines and their customers are not repetitive. Definitely, there are other people who have noticed that, and during AGM, they must have actually asked the management, which they did. And if you look at how the management answer, they say yes, this is true. Currently, their sales of machines to their clients is non-repetitive in the short-term period, but they are looking at ways to how to pivot their business, go into something that can actually be more repetitive, which as of now, I still don't know how they're going to do it. But the company has been growing under the current management. He has 60+% of share. Definitely, he will never want the company to go bust because his net worth is dependent on the share price of his company. So we have to wait and see how he actually pivots the company. But I think as of now, he is more afraid than us if his company cannot venture into a new business that can promise or to generate a new income stream, which is more predictable and more repetitive. But this is still a very good thing to keep an eye on.
I think something to share. I don't think we put into the slide. If you guys zoom into the annual reports, you will see there are some form of recurring income in the item of maintenance. But of course, if you take a deeper look, then you say, wow, it's only 1% of whatever they make from the machines, which is something worrying. But then one thing I wanted to share is they started it off with Me series. I think in the earlier slide, there are a couple of machines, couple of products offered by Me Technovation. Me is actually their, I would say, the killer products. Instead of finding ways to get recurring incomes, some company, the nature might not be able to do it. So what they do is they went on to expand the, the product linked to these killer products. That's why they offer themselves as a sorting machine, also come with inspection plus testing capabilities, which is quite smart. Because when you cannot turn something into recurring, you find something else to sell, and then this thing will work on a 1 + 1 greater than 2 kind of effects to the people who buy this. So I think this is one of the very good strategy they have already in. But of course, we would like to see more recurring income, like how Frankens are able to do it with TSMC. So we need to take a look, but then don't straight away put a full stop if this company don't have a recurring revenue stream. I can see they try to find something else to sell to make their offering more comprehensive, and then all these things is a plus point to their original killer products. So something to take note. It's not just no recurring. Then no recurring means non-predictable, but you can see it from a different cycle, because buying machine is about getting different people buy from you from a different cycle. If let's say they buy it from a different cycle, this guy, the guy buy 2021, another guy buy 2022. If you can plan it well, then it's still fine. Which you can see it from Technovation. 1 year, this guy didn't buy anything, but substitute by another key clients, which is still manageable for them at the moment. But my worry is they make their capacity from 100 to 1,000. Are you able to substitute that that volume of buyer to you? Something we need to take notes, because utilization rate, of course, is good in the previous year, but now maybe with COVID, all those things, they might not even utilize 10% of it.
Yep. This is very true. I think when Chunbing, you just mentioned on how how they maybe do different versioning of their company of their machines. It also got me to think back on previously how iPhone actually how Apple actually sells iPhone. So basically, it was just iPhone 5, iPhone 6. Then you have 6 Plus. After 6 Plus, you only have 7. Then you have 7 Plus. So it's basically the same phone model with a little bit of extra. And then this kind of extra sometimes can just make public buy or change their phones lah. So this is also how Apple earn money. They ensure that the sales of the iPhone is just not during the period when they launch and then they just back. So they have their strategy, they launch it, and then if it starts to come down, okay, promotion. And then once it started to come down again, then okay, 6 plus, 7 plus. So this is how companies like me or the companies that sell people one-off kind of purchases can look into, at least for the short term. And then for the medium to long term, they have to find something which is more repetitive and predictable lah. So last but not least, the exciting part, how valuable or how much would you be paying if you were to buy a company in the name of me, Technovation, at today? So EPS trailing is around 8.45 cents. And if you were to buy at today's price, you'll be paying at PE ratio of roughly 52 times. ROE is impressive, 16.25%, given that the company has been generating 20 to 30% kind of net profit margin, and trailing 12-month profit margin is at 30%. Dividend, they do pay dividends as well, 4 cents as of the latest fiscal year. They divide by the share price, not so monarch, not so exciting. 0.92% is probably even worse than your FT kind of returns. But when you buy a company like me, Technovation, you're not buying a dividend stock. You are buying to the prospect that the company, which is currently just built their second plant which early of this year, can sell and make 1,000 units of machines every year. Your goal, your dream, and your expectation of this machine is to really hit that 1,000 units of machine as soon as possible, and then hopefully they can build another plant and then double up their capacity. And it is only that the company can continue to grow, can continue to give higher revenues, register new trademarks, new patents, come up with new machines. Maybe this time they can target even the other players, not just the OSAT players. There's also another pocket of opportunity for a machine maker like me to actually grow. So they can, maybe now they solve all the OSAT problems, they can look into other value chains of the semiconductor and provide their solutions to other places as well. And of course, NTA is also at 52 cents. You are buying it at 8 times. Personally, for me, I think it's a bit too high. The company has potential, but for a company that will not have repetitive and recurring, I will not be willing to pay such a high price at the current climate lah. Chunbing or Sean, any opinions or thoughts after we look through the business model of me and also the current valuation that this has?
Just on valuation, the PE ratio is about 52. But if you see 2018 to 2019 growth is about 20%. So yeah, I think it's maybe still fairly valued now, maybe slightly higher at this point of time.
Yeah. Chunbing?
I think myself, of course, 52, like what Sean says, is slightly higher if you compare to the growth. But one thing to note is if you do a quick search in Malaysia stock market on technology sector, after COVID, they are the sector that keep on going up for whatever reason. Bilifrancan, Inari, or whatnot, they managed to climb up to some of them is at a historical high. So I think this is a group momentum, not particularly on the companies. So probably if you wanted to check, maybe you should compare how it performed before COVID. I think those is more closer to the real sentiments of people trading it and how they see it. Because now, I think any other tech-related stocks, of course, they are not crazy like vaccine or growth-related stock that they can spike up that much. But technology stock, it just, I would say, is a curve that quite similar to all the stock. It's always like this. Sorry, I think this for you guys to see. So it's not real to me lah. I think anyone is. I cannot buy this. I buy Retrox. I cannot buy Retrox. I buy Great Tech. Things like this that happen. Maybe you should look back on before COVID how all this perform, and then compare back whatever thing they understand from annual reports, or make the judgment rather than compare at the price now. Of course, all will be overvalued, in my opinion, because it didn't just go up. People don't want to buy back, then come here.
Yep. I think fair point, Chun-Bing. Definitely, if you want to gauge the fair valuation of me, look back at previously before COVID, before the tech stock became crazy, and determine what was the current previous PE that was reasonable for a company like Technovation. Then you'll get maybe a clearer view on what kind of price to pay for a company like Technovation. I think we have one last question. Please keep the question coming in. If you guys still have questions, we'll try our very best to answer them. So Kelly is asking, Mi series contribute 90% of the revenue. Too depending on a single product, do you think it's in a high risk? Case to case. For a company like Technovation, selling machineries to customers, which already show that it's already a proof that it cannot be recurring. They sell customer A this machine, then next year the customer A will not buy the same machine because customer A still can use the machine. So in this kind of scenario, definitely there is a risk, and the risk will actually turn into a danger if me cannot continue to find new customers. So I think the business at its core already has this kind of risk, but so far me has managed to mitigate it by finding new customers and growing their revenue by targeting new customers. But if you look at the core business itself, this is the kind of risk that this company has now. But doesn't mean that you cannot totally don't invest in it. It can be a factor of how you want to position it inside a portfolio. If you think this kind of risk is too big, but you still think it can grow, you can either buy a small part of it instead of silang or put a big capital in this kind of company. So it's really how you position your stock portfolio. Companies that we share, usually we vet through. It is a good company, has good business model, may not be perfect, has some kind of risk here and there. But at the end of the day, if it's a good company, you're comfortable to invest it, you have to just look deeper. How much I want to buy, how much should this company be a percentage in my portfolio? If it has this kind of risk, then you don't buy so much lah. Because if anything were to happen, so if you buy too much of this company and coming quarter, coming annual report, they didn't manage to maintain their growth momentum, definitely the share price will tank. And if you buy too much of these shares, then your overall portfolio will follow to tank as well. But if you buy a bit, yes, if the company does not perform, share price will tank, but because you only buy like 10% of your portfolio, then your portfolio will see minor drop in terms of total portfolio value. So business, there's a risk, but doesn't mean totally write off the company. It really depends on your study, your analysis, and then how much you want to position this company inside a portfolio lah. So I hope you guys really enjoyed this company. I also enjoyed it together with Chun-Bing when we were studying it through. Let you guys know, I think all the tech companies in Malaysia, we never knew the business model so deep. And we know that every Thursday we have to share it with this company. Every Thursday, a new company with you guys. We do our due diligence. We dig out the annual reports. We dig out the IPO prospectus. We highlight the important points. What is good about company? What is not good about company? But at the end of the day, you guys you do the detailed study, and then you put your money to where you think it's worth. And I hope that you find today's session beneficial. And if you want to rewatch it, definitely feel free. We are not going to take it down. Rewatch it on our Facebook and YouTube. Give us a thumbs like, comment if you have any other questions, and then we will try to answer. So because at the end of the day, this is what KayaPlus wanted to do. We wanted to learn together with you guys. And we hope that every Thursday, 9 p.m. to 10 p.m., your time is well spent. You gain something, we also gain something. And let's continue to make your Thursday night a beneficial night lah. So if there's no more questions, thank you guys for watching. It has been a great pleasure every week of meeting you guys online, sharing good stuff with you guys. And thanks for the support. And we will continue to do it until the day you don't need us to do any kind of sharing. So that's all for today. We see you next week. Let us know in the comment section what kind of companies that you want us to share about next week. And we will do our very best to repeat this kind of performance for you guys. So I was signing off. See you next week. Bye-bye.
Thank you.
Thank you.